What is up, YouTube? What's up, guys? The Composure Trader here, and welcome back to another daily recap, post trading analysis video, whatever you want to call it. We are recapping all the price action that we are trading live inside of the TCT trading community to truly showcase everyone the results that you can compound over time when you trade consistently with a proven, profitable trading system. So, last few days, we have been looking for an entry on ETH from an accumulation perspective, and we were actually in a long position, which was up quite some money, but we ended up getting stopped at break even. So I want to be talking about the trade that we were looking at, which was in this range right here. So first, as always, let's build some context because that is always very important, and that's what we always do starting off with the analysis. So ETH right here has had a very aggressive expansion towards the upside, deviating the all-time high right there, creating a potential distributive and ranging environment right here where you have the range high, you have the range low, and you can see the deviations at the highs. Now, this is not a high probability distribution at all because the move up from the range low to the range high was incredibly fast. You can see this expansion candle, and the time displacement between tab 2 and tab 3 is simply not there. And these tabs on a higher time for like the 8 hour also merge together as one tab. So when you're pre-planning this, the highest probability play would be to go down and get some sort of a move up, creating a return to zone, creating a higher time frame model 2 right here in combination with that lower time frame extended model, and then shorting that down. Okay. However, instead of that actually taking place, price got a pretty deep retracement towards the discount section of this range, and we actually started accumulating. Now, right here, you can see price making lower highs and lower lows, just like this. And here you can see that typical range starting point formation where you have the distribution creating the range high of the potential higher time frame accumulation, which originally started like this. Now, this distribution was also at the same time as we shorted the 9RR play on SUI, right? So at the same time that we shorted SUI, we had ETH also creating a Model 1 distribution, pivoting price towards these lower levels. Now, from here, you kind of got, initially speaking, the similar price action as what you have at the high right here, where you got a deviation of the low followed by another immediate deviation. I'm not looking at this from a Model 1 accumulation perspective because the move down right here is simply too aggressive, and the time displacement between the tabs is not there. So whenever we get something like this and we have a higher time frame range, I just view this all as just second tab price behavior, and you want to see price action go back inside the range and then come back for better time displacement from an accumulation perspective, the same way I just explained it from the distributive side. And right here, price had initially some demand POI. I remember this. We had some demand right here in this area that price could come back for on a lower time frame. This was structural demand. And initially, when I was pre-planning this, I wanted price to get that expansion back inside the range and slowly come down, creating that distance between the tabs to have a clear, defined model. However, this was actually over the weekend. Yeah, this was over the weekend. We got an immediate back test and then got the expansion towards the upside later that weekend. So this was too narrow price action, and therefore I'm not interested in trading that locally as an accumulation. Now we can see right here that price pushed up, distributed right there on a lower time frame, and then sent price lower pretty aggressively. You can see right here, if we extend the range low to the deviation low, right there, boom, just like that, we can see that despite the multiple deviations right here, if we go to the 4-hour time frame, right, this can all simply be a Model 1 accumulation where price is making a low, a lower high for a lower low, and a lower high for a lower low. Okay, 1 move, 2 move, 3 move, Model 1 accumulation. That's when we can start to look for a potential pivot back towards the upside. Now, the pivot of the third tab right here that took place either in the after hours or during Asia. So it actually took place in the after hours right here, and we can see just this super aggressive and fast move down right here. This right here indicates that there's a lot of liquidity in this move getting liquidated. That's not the correct way to say it, but this move right here is because there's a lot of local sell side liquidity that gets taken. These are not particularly market makers selling aggressively. This is liquidity right here on the left getting taken, and that's why you also see big volume spikes coming towards that low. That's liquidity getting taken, giving the market maker the opportunity to fill their long positions if that is what they are intended to do, which you can kind of base off bullish breaker structures. But price right here ended up breaking structure back inside the range. Now, this wasn't a convincing break in the beginning, and it kind of went up in a structured way, leaving liquidity below. But this was also in the after hours and during Asia, which is when I'm not present behind the chart, so I missed this price action, okay? But price action is kind of right here establishing a third tap from a model 1 accumulation perspective. And then right here, we also really get that acceptance. Right here, we also really get that acceptance back inside the range, and we can see that V-shaped reversal, right? Breaking structure significantly, ignoring supply, making supply fall, showcasing that demand is in control. And that's when we're technically in a confirmed model 1 accumulation, and price should theoretically rotate back up towards the range high prior to taking out this low. Now, from there, we wake up in the morning and we're looking for re-entry opportunities for that low time frame entry for the high time frame target. And looking at this move, which is mainly liquidity, there was some demand at the highs right there, but the extreme liquidity is located right here around that original second tap. And we can see we have that 10-minute higher low for the higher high as a very obvious extreme liquidity target with a perfect location from a deviation standpoint, which is around that second tap, like I just said. That's when we can start to look for potential re-entry opportunities. And what we can see is that price action kind of has some sort of a distribution that yet again pivoted price lower, and we came down pretty aggressively here during London and also pre-New York. You can see here London went down and pre-New York went down pretty aggressive. Did not come towards our extreme liquidity POY, and then we got the New York pump before the reversal, and you can see that in this area we created a range. Now guys, when we create a range coming towards an extreme liquidity POY, which could cause this model 1 right here to flow over in a model 2, I'm always looking for some sort of a TCT in TCT entry, okay, where this is our range low, and then that becomes our first deviation, and from there we can look for actual accumulation models. I am less tempted when price creates a range at my potential extended higher time frame tap POY to already trade a breaker structure back inside the range just on the second tap, because if it's a range, right, the range is only fulfilled for a rotation if we actually get a proper TCT accumulation model. If I decide to trade a second tap because the return to zone is just extremely clear and I don't see a way for price to deliver a pullback, I will always keep my stop loss safer. So I'll put my stop loss below an actual, not below this low, because you still got the liquidity right there. I'll store it, one higher low lower on a lower time frame just to be more safe until price really expands, and then I'll trill the stop loss up. But if you're trading second taps, just be a bit more flexible with your stop loss and don't keep it there, because if you have an accumulation forming, it could take that low again. And that's exactly what we saw right here. We got a breaker structure back inside. It got reversed towards the downside. We swept that liquidity. And from there, I was looking for a model 1 accumulation entry. Now, as you guys should know, when we're looking for a model 1 accumulation entry, we simply observe that market structure coming down towards that third tap right here. That is making lower highs and lower lows, just like this. This right here is not structure because the 6 candle rule cannot be applied. And then we have the market structure high right here. Okay. Now, on the way up right here, we are creating a 1-minute OBIF, which is also our extreme demand. Okay. It's the only demand protecting price from that third tap right there. Price goes up, comes back down, and then gets the bullish breaker structure after mitigating extreme demand. This is the perfect example of a test entry. Anybody that has watched the Mentorship 2025, in section C, I specifically have a video talking about trading the test of a Model 1. So for the people that want to know more about that, you can watch that video and you can find that mentorship inside the Discord, okay? Right there, you got that breaker structure. Now, this is 10 p.m. for me. Again, this is during after hours. I am not actively trading during after hours. And for some reason, market makers have decided to deliver all the entries in the after hours or in the Asia session. But I entered a bit higher up when I saw that the breaker structure already happened right here at 10:10. Let me grab 10:10 right here. Boom. This is where my entry was, okay? Putting that stop loss actually below that extreme liquidity grab just to be a bit more sure, okay? Just to be a bit more sure in case price later wants to use this as liquidity because we came up leaving some lows. Technically, the test should be protected, but so low time frame, then I'm like, you know what? Let me, be a bit more safe since the RR is still extremely good. Now, right here, I am anticipating on a Model 1 accumulation schematic, and price should have that rotation back up towards the range high, allowing us to already have 3.8 RR unrealized profits on the model. But we're not just targeting the range high right here. This is a good looking bottoming formation that is taking place in the extended tap of a high time frame Model 1 that is flowing over into a Model 2. So I was targeting the actual high time frame range high, right? This is trading TCT and TCT, trading the higher time frame 1, 2, 3, 4, Model 1 into Model 2 accumulation, where the extended tap has its own low time frame 1, 2, 3, Model 1 accumulation, right? So this, at that point in time, was the setup. However, there are a few things that you can already pre-plan while entering right here. Personally, I went to bed because I had to go to bed, and I woke up in the morning after seeing a lot of price action happening. But this was basically the entry with the target, okay? Refined TCT and TCT entry targeting the high time frame range high. And you have a lot of liquidity here. It's an amazing liquidity curve where you can also see, and again, I talk about this in the Mentorship 2025 as well, a return to zone divided into two sections. The return to zone from the range high to the most recent pivot that creates this range, and then the local return to zone in that range that is visible on the lower time frame. But what happened right here is that price got the expansion towards the upside first, okay? We got some move towards the upside right there. Okay, move towards the upside. It's kind of slowing down. It's kind of distributing, but we're getting a move away from our initial entry. If you paid close attention, in the video, I talked about what could happen if price has these tabs, which are more narrow on the lower time frame, if it wants to develop into a higher time frame model. And I'm kind of already spoiling it a bit, but on the move up here, there is one level where we have created structure demand, and that is right here on this only created inefficiency. Literally right here, the only created inefficiency on this move, which is also, again, structure demand with the overlapping effect, also discussed in that new mentorship. But this is the extreme demand, okay? It's the only sell to buy with an actual inefficiency. And since tab 2 and tab 3 here are extremely narrow, on a higher time frame, like the 45-minute, which is still a time frame that this range is actually valid on, you can see that these two tabs, they merge together as one tab. So what could price do is price could get that expansion away, right? And then later on come back for the extreme demand and create a Model 2 accumulation. And that would actually be the highest probability entry. So what happens here is that price ends up going up, but kind of showcasing distributive price behavior, and it then pushes price back down towards that extreme demand to create a higher time frame Model 2 accumulation with your 1, your 2, and your 3 coming down during the Asia session and getting that aggressive break of structure back to bullish. Like, this is perfect, guys. Opening your session, coming down to the LPS of the Wyckoff, seeing the marker step in, push price higher. That's the obvious entry confirmation. So what you can do, if I was actually awake, if the first entry is from here with your stop loss right there, and then price gets the even higher probability entry confirmation during Asia, trading the higher time frame model 2, the moment you get that breaker structure right here, okay, the moment you get that breaker structure, you can trill your stop loss to this low because this is now the new Wyckoff low, and then this trade would literally break even, and then you can add your risk back right here on that bullish break, and then you have, you know, a 10 RR trade just towards the technical target. But I was simply sitting through my position because I was not awake during Asia. I was sleeping, probably dreaming about this model. But then on that third tap, price right here created extreme demand, just like that. And then during London, price yet again pulled back, leaving a local return to zone above. Saw the bullish breaker structure of the fourth tap right here. 1, 2, 3, 4. This is the LPS of the Model 2 accumulation. And literally from here, after breaking structure back to bullish on the lower time frame, that's when you want to see the aggressive rotation towards that range high, okay? Because there's nothing but an inefficiency here. There's no price action spent there. So just liquidity and a lack in volume. So the move up should be fast, which we're seeing right here. Boom, fast move up. Okay, so the entry from here had the original stop loss right there, and we're targeting way higher. Now, the moment we confirm that breaker structure, we can now actually keep this position open, and we can trill our stop loss below this low, indicating that our stop loss is risk-free, right? Our trade is risk-free. Our stop loss is risk-free, but our trade is actually risk-free. And now we're targeting the range high here. And you can also see now on the higher time frame that this is looking like an extremely clean 1, 2, 3, 4, and we're expanding away. So we're trading the Model 1, going over in the Model 2 right here, finding our entry on the low time frame TCT model, which on its own have many re-entry opportunities and a great way of managing risk within the setup. And from there, we had the position open and then targeting the range high, which is the technical target of the accumulation model. And we got to move up right here, but then instead of actually breaking through that volume area high, which was showcasing the clean inefficiency that we had in the upper section, because there was literally a lack in volume, instead of breaking through it, price actually ended up breaking down from it. Now, in the process of pushing here, this was the extreme demand created, which is market maker demand. Let me quickly clean this up. So right here, we have our accumulation model. 1, 2, 3. That's the extended tab right there. And then on the LPS, you create this structure demand. Below this structure demand, there is nothing but lows. There's no demand below this structure demand. So that's your extreme market maker demand because it was backed by this Model 2, extended Model 2 accumulation. But what I wanted to see was price to have follow through. So at that point in time, our entry is literally from here. And our stop loss is risk-free. Okay, basically this is the trade. Now, what happens, I want to see price surpass that volume area high. We have a risk-free position. And then from there, price ends up retracing back down pretty aggressively. And this is when I was already getting a bit skeptical because I didn't want to see price retrace this big. I low-key wanted to see price consolidate here and just push higher, maybe reject here before the continuation up. But that should have been a faster move overall. And then we got a pretty aggressive move down. There was a potential adding opportunity if I saw price, get some good reactions of this level and break structure back to bullish after creating a local return to zone from here to here. But you can see that price bounced, created supply in the process of tapping into demand, which you can see right here. You tap into demand, and then right here, you turn that into supply right there. which is already indicating that we're most likely going to get stopped out here. And then boom, price takes us out. And this is where we are currently at. Now, the the technical high time frame accumulation model hasn't been invalidated yet, because the moment that price completes this local accumulation schematic, these tabs right here aren't protected because they're not backed by Wyckoff. This is basically the extreme liquidity right here. This is basically the extreme liquidity of that initial expansion from the extended tap away. Looking at this from an expansion perspective, this right here, this tap is part of the high time frame model where you have your 1, your 2, your 3, and your 4. But these two lows are part of this local model. But the moment that local model has completed itself right here by hitting the range high, these lows aren't protected. So technically, from a high time frame perspective, this could still be a model 1 into a model 2 into an extended model 2. So if I delete those most recent dots right here, you can see you have a 1, you have a 2, you have a 3, you have a 4, you have a 5. Now you can only trade a 5 tap if you have a model 1 into a model 2 into an extended model 2. But you know, the price action right here is a bit sketchy because right now we are literally at a high probability supply, and we'll have to break through that if I want to be convinced that price wants to go higher, because otherwise you can just reject from this and just get sent back lower, right? So I'm still looking at this overall environment for a potential long, but maybe it also wants to sweep these triple lows below. So you know, we're seeing accumulative price behavior, but the initial entries aren't sustained with an actual move towards the range high. So we'll see, but overall, it's another example where, you know, with strict entry position and correct trade and risk management, we are yet again in a position where we can be risk free and letting the markets decide what the profits are going to be. Like if you lose little to no money when you're wrong, it's going to be extremely easy to make money trading because you're going to be right as well. So if you can make a lot of money when you're right and lose very little when you're wrong, or even make money when you're wrong, that is the key to these games, to this game of trading from an overall execution standpoint, right? Because it's all about that execution, that precise entry, understanding that via the technicals, and then having the discipline to actually execute it. So break even trade for now, still looking at the overall environment for a potential long, which will all be traded live inside of the TCT community. Peace out, guys.